Hello and welcome to another episode of Stock Shots. Please remember, I am not a financial advisor. I'm just giving my opinion based on some things I see, like support and resistance, supply, demand, and of course, some indicators that may be on the screen. So always do your own due diligence. Make sure you educate yourself and always look to the left because we're looking at things that have already happened to think about what things may do in the future. So this is another episode of Stock Shots. Welcome.
Let's get started. We're getting started with the S fund, that is Dow Jones Industrial. And what do we have? We have a continuation of this breakdown. Our actual hindsight, where should I have gotten in if you were doing options and go the other way? But we're talking about TSP. Where should you put your money in the G fund? It would have been up here, and that would have been on the week of April 1st, April Fool's Day, right? Makes sense. Now, if you're looking for a time to put your money back into the S and C funds, then you want to make sure that in at least a daily or weekly time frame, you see a bounce from these levels here. It may come down to about here, and that would be the 1825. But I want you to be very aware in the daily time frame, coming down to about the 1705.26, there is a gap. All right. There's a gap that most likely will get filled at some point, and there is another gap down here lower in the daily time frame. What that means is you never know when these are going to get filled. All you know is eventually they will get filled. So be very aware that if you see a very big downturn somewhere, there are two gaps below where the current price is, and they are in the daily time frame. Okay? So, what does that mean? Well, we have some demand zones. If you do not see rejection from these areas, that means you're probably going to go to these gaps, get filled, and then go back up. Now, in the weekly time frame, we've come down to this area before. Not once, twice, 3, 4, 5, 6 times we were around this area. Okay, so there are orders waiting here in case price does come down to this area. It most likely will bounce up. Currently, we look like we may be getting to a resistance because we had a lot of news this week. It was economic, and of course, the other news we don't talk about that much because they will ban you from YouTube pretty much. But it was international news. Let's put it that way. So that did affect us. If you have not gotten into the G fund, remember, I'm not a financial advisor, but why lose money if you don't have to? Essentially, you're waiting for price to come once again down to here, and that is the 1891.95 area. If you see a bounce or strong buying volume, then you probably will be able to go back into the S fund. So that's one. Let's go to the C fund. C fund has about the same story. We have a lot of information here. So in the current time frame, when was the best time to put your money into the G fund? That would have been April 1st. Why? Because hindsight's 2020. But essentially, if you did it around the second week of April, around April 8th, you would have saved yourself a lot of money. Essentially, that's what I did. And all I did was lose from here, that 51.37, all the way up to here, the 52.20, 21 area. So, what was that, 52.61? That's not horrible. I'll take that because I didn't lose any of this long red candle. And at this point, we are still going down. So let's see what it says. Essentially, it's overlapping a lot of levels that we have. Our levels are always weekly levels that we plan out and put onto the board here, unless we are doing a daily time frame, and it might just be a white line. So the white lines are usually a small support or resistance. And sorry, these gray lines are the small support and resistance for you guys. I'm putting white lines here. It makes it a little bit easier to see on the board. And here, you'll notice that our next area to come down to is 48.40. If we get there, you're looking for a bounce because that will line up exactly what we're talking about here. Let's see what moving averages are there. None. If we're looking for our next resistance from a moving average, it will be the 48-day moving average. I like to use that for myself, and that will be down here at 46.40. But let's see if we're going to go which structure first. If we're going for a structure reversal or a structure bounce, it will be right here at the 48.41. All right, so let's see what we got for the international fund. International fund, it's the same story on all of them. If I had drawn a channel on the other three or the other two, you would have noticed the same thing. We broke our channel, we came down. Now we're looking for a bounce from resistance. As you can see, we're still here. Let's see where our moving averages are. Next moving average is down here at 73.24. Okay, so if we bounce down to there, it would be sensible to look for a reversal up from that moving average. A lot of times there'll be a lot of orders waiting around the 50-day or 48-day moving average, depending on what the algorithms use. You'll also notice that if you have an order block or area where you have consolidation, you'll most likely have a lot of orders waiting there. So in the international fund, if we get down to $74 range, look for a bounce there. If you go past there, about $73 or 72, I would say high 72s, you might get some orders there too. So these are areas right here and right here we're looking for a bounce, okay, for the international fund. So let's talk about our last one, and that's the bond fund. All right. In the bond fund, we still have our Fibonacci up here. As you can see, let's get this out of here, make it a little bit easier. We're right at our support. Is this good? It doesn't look good. It looks like we have a bearish candle here at this moment. Okay, and I'm not very happy about it. But the aggregate bond fund, if you don't know this one thing, the bond fund can lead the stock market. So if the bond fund looks like it wants to go down a little bit more, that means the stock market probably will go down a tad bit more. And let's see where we want to go. If we want to go down, that would be about 93, 95. Now, if you just do it based off of a supply and demand setup, it would be down here in the weekly. And that'd be about 92 down to 91. So let's see if we go by indicator, what we got. It pretty much lines up down there, about 91. And then we have a 93. So, hopefully it doesn't go down that far. But worst case scenario, you may get down to the 90s. Very worst case, down to 87 for the bond fund. So that's what I see so far for this week in the TSP funds. We're still going to be going in a downward motion. If you like this, hey, let me know. If you want more of this, let me know. Indicators, if you want to know more about indicators, I think that was so far the most popular thing on the channel. I might do some more indicator videos. So thank you very much. This was Stock Shots, and we talk about our TSP funds, the C, the S, the I, and the F. And that's it. So we got. See you next week.